Hi guys, I'm EP. In this video, we are going to see the happy news for Japanese investors. That is the Nikkei 225, the Japanese index, which has took over his all-time value of 39,000, which is the highest value since 1990. And now today, February 22, the value has crossed after 34 years. Okay, now let me share my own view on this, and I will share what and all an individual investor should do before he starts investing in stock market. Okay, let's get started. Okay, now we are seeing the chart of the Nikkei 225 index, that is 3 months chart. Okay, and if you see here, it is the highest value of 38,957, and at the year 1989. Okay, the 39,000 mark is the highest value of 1990, and after now we can see the downfall of the Japanese index, as well as the Japanese economy also fallen due to many reasons like war, poor corporate governance, and some bad government policies likewise. Okay, now we are here at 2024 February month, and if you see, it takes around 34 years for the stock market to gain its again value. Okay, and in the past decade the Japanese economy is doing well, so that the stock market also rises. Recent news we have heard that the Warren Buffett, the famous investor, also invested in Japanese stocks likewise. We may famously hear the saying of every people, that is, invest in the index fund and forget it. That's it. But if we see here, according to GDP, Japanese is the third largest economy in the world. But for that country also these things happen. Okay. But as an individual investor, we should also invest in index funds plus individual stocks also. I will also suggest you to invest in only passive index funds, not in the active index funds. Okay. And we should do two things. One is invest in the index funds. The second one is invest in the individual stocks. Okay. Okay. Now we are seeing the Toyota Motors company, a stock price movement. This is also a Japanese company, and if you see here, it is the 1990 mark, and from there you can see the growth of the Toyota companies. Okay, it is because the company is selling a good product in the market. Every country in the world uses Toyota cars, as well as the company has a very good financial sense, so that in the long run the stock continues to give good returns for the investors. Okay, this is the two case scenarios. The first one is index, and second one is individual stocks. Okay, as an individual investor, we should split our money into two and invest in individual stocks as well as the index funds. Okay, I highly recommend you to invest in the passive index fund only, not in the active mutual funds. Okay, because the expense ratio will be high in the active mutual funds, so that our return may reduce in the long term. So that I always suggest you to invest in the index funds as well as individual stocks. Okay, already we have seen the book show of the intelligent investor, which is written by Benjamin Graham. We have seen that, and now we are doing the book show of the Peter Lynch book, that is Learn to Earn. And after this video we are going to see the One Upon Wall Street. Okay, these are all the investors we should follow. What they are telling is we should invest in a very good business with the very good financial stability. Even though it is a very exciting business, we should not buy the stock immediately. Always buy a stock in a bargain price, so that we can make a good return in the long run. Okay, we are seeing the Nifty 50 index 3 months chart. Okay, now if we see our market movement, now our economy is so good, but as an individual investor we should ready for anything. Okay, I'm not saying that our stock market will also behave like Japanese market and it will be in a downtrend for 30-40 years, but we should also ready for that. Okay, but nobody knows where our stock market will go in next month or next 3 months or even next 5 years. Okay, the one thing we should consider is we should invest in index funds as well as very good companies individual stocks. Okay, the way of investing in individual stocks, we should not do it in a random way, rather than we can follow the Benjamin Graham way as well as Peter Lynch way of investing. Okay, so that we can find a very good company with a very good financial stability, as well as we should buy the stock price to a bargain price, or else we should buy the stock price near to its intrinsic value price, so that in the long run we can get the profit out of it. I'm not saying that this will happen to Indian market, but as an individual investor we should be ready for that. Why I am saying is the Japanese GDP is far ahead of India GDP. If the situation happened to Japanese market, why not for India market? As an individual investor, we should also ready for that. Okay, in the long run, the index is always pegged with the economy. If the economy is doing well, so that the index will also do well. Okay, but the individual stock does not depend upon the economy itself. Rather than if the business is selling their products across the country, then there is no issue for that until the company is growing and making profit, so that the value of the company increases, so that the stock price increases, and if we invest our money, so that we can also make a profit out of it. Okay, as an individual investor we should ready for anything, and we should not put all our money in the stock market. Okay, in the previous videos we have seen the asset allocation, the gold, the emergency fund, the bonds, and stock market. Okay, and in that financial assets, how much percentage of our income we should allocate, we have seen everything. Please go check that out. And also I highly recommend you to watch our intelligent investor book show as well as the Peter Lynch Learn to Earn book show. Okay, in the next video onwards we can see the One Upon Wall Street book show. Till then, stay tuned. Thank you for watching.